Welcome back to HFO Multifamily Market Watch, your trusted source for information for apartment owners and investors. Multifamily Market Watch is presented by Pacific Exteriors Northwest, a contractor specializing in siding and exterior envelopes and delivering exceptional quality and service for over 30 years. And by Gantry Incorporated, the nation's largest independent mortgage banking firm.
Welcome back to Multifamily Market Watch. I'm Greg Frick, partner at HFO Investment Real Estate. And today we have with us one of our senior brokers, Lee Fehrenbacher. Lee, thank you for taking the time to join us on Multifamily Market Watch. I thought we could talk a little bit about, we've done more than a couple, but we just, did a couple what we call urban brickers or, 1920s, 30s properties, typically in the urban core. Mm-hmm. We've closed a handful and we have some out for sale as well. We could just talk about kind of maybe some things that have changed in those and the transaction side of that and kind of what we kind of learned in the last couple of years in doing those kind of transactions.
Yeah. Where to begin? There's a lot that's going on, I would say. It's kind of an interesting time for the urban core in Portland, generally speaking.
Right.
Obviously with, it seems like a flight of capital to the, outward suburban markets around Portland. But with our urban brickers specifically, I think one of the more interesting trends that we've noticed is insurance.
Insurance across the market it's almost like these urban brickers were the canary in the coal mine, I think, in terms of insurance first.
Yeah.
Like, hey, we're having, it's tougher to get insurance.
Yeah.
Now we're seeing it across the board, but these ones, it was unreinforced masonry, it's a number of stories. I mean, I think you and I have talked about this, the challenges of, it used to be you do a deal or do a transaction, you're getting ready to close. Hey, let's make sure this go insurance. Now, I mean, it's almost part of the due diligence and, can I get commensurable assurance? What do I do on that? I mean, what's the kind of experience we've had on, a couple of our transactions?
Yeah, I mean, I think, the insurance numbers that we're seeing for older, urban brickers are, higher than we've ever seen ever before. I mean,
right.
And there's a lot that's going into that. Just insurance across the board is a really challenging, thing to tackle right now for any building. But, I think a little bit of the fallout is that a lot of the insurance carriers are, looking hard at the urban brickers that are in their portfolio and really questioning, do we want to insure this? And if
how much
so,
exposure
how much exposure do we
right.
want? And what does that look like? And if we're willing to do it, here's the premium that we're going to ask for. And so we've seen costs really increase dramatically on that front. I mean, we used to, average seemed to be with earthquake insurance, anywhere from $600 to $1,000 per unit per year. I've recently seen buildings north of $4,000 per unit per year.
Now, that was a unique one. Let's not scare everybody that we're that's a unique. Yeah,
that's true.
But no, they have gone up. I mean, I've told people you got a 20% increase in your insurance, grab it and don't have them come inspect it and take that number.
Yeah. Heaven forbid you actually have to use the insurance. Don't do that.
That's another story too. I mean, I think that's going to be the big thing moving forward is I think as an owner, you've got to really dig into your coverage.
Yeah.
I mean, used to, not saying people really didn't dig in, but do you understand what you're covered for and what you're not? Because that's going to make it a determination, much less likely to, want to put a claim in unless it's, catastrophic. But, what are you covered for?
Mm-hmm.
Are you covered for a water leak? Are you not? Or, things like that. So I think, especially on these older properties where the mechanical systems you talked about, I think people really have to get a firm grip of what is my coverage, know that, and then, act accordingly.
Well, and I think interestingly too, in terms of how investors are looking at these older buildings, is they're coming to the table with a budget either for the higher insurance premium
right.
Long term, or they're budgeting in the renovations that they think are going to be required in order to reduce that insurance level down. And so, 6 1, half dozen the other. What's your preference for improving the building or running the building? It's going to be costly either way. And so I would say in the last year, we've really seen a hyper focus on the insurance side, and really, investors or buyers kind of budgeting in how they're arriving at their price or value because of those higher expenses, whether improvements or just carrying the higher insurance. Right. One of the challenges too has just been, in terms of like kind of reaching out to insurance brokers, and insurance agencies, what, if we do this, what can we expect to see over here in savings? If X, then Y. But it's hard because I don't think anyone really knows the answer to that yet. Like if we go do a system-wide upgrade on the electrical or a system-wide upgrade on plumbing or what have you,
They won't give you a firm commitment.
it's hard to get a firm commitment. They say, yeah, there's probably some savings there, but it's really hard to
Or
say, like, what exactly
we'll
would that look
underwrite
like?
it.
Right.
We'll underwrite it for insurance, but there's no.
But once it's complete,
Right,
right?
exactly.
Like once you've already spent,
Right.
that massive capital improvement
Right.
project, then we'll look at it.
Right.
But it's really hard to get a soft quote. I mean, and I feel like that's new because it used to be relatively easy to go out to any insurance broker and say, like, what's insurance going to look
I'm
like?
trying to
for
budget
this?
for the next couple of years. I want to get an idea
Right.
of where we're going to be.
Yeah, and I think with all the natural disasters that we keep as a country kind of experiencing year by year, it's really kind of thrown the whole insurance industry into turmoil. And I think the insurance brokers will be the first to tell you they don't really know.
Yeah.
Yeah.
Well, I know one thing that's been interesting on the especially on urban core projects is there was a lot of supply delivered in their downtown urban core. There were a lot of concessions. I mean that I think filtered down to some of the older properties. So I think we've seen in some of the deals that we've been involved with, maybe higher vacancy, longer maybe economic vacancy, some turnover. I mean, I think the sense is, I mean, you tell me, make the case that we're getting back to a more normal, vacancy rate as that newer stuff absorbs, or kind of what's your thought on that?
Yeah, no, I think there's positive signs on the horizon for the rental market in the core and kind of downtown, northwest, close in east side. I think for a while a lot of those older buildings were offering the same kind of incentives to try and compete with all that new product that came on. A month free was not a normal on the older buildings, and I think you'll still find that on a number of buildings. But I think that's starting to fade away as we've kind of filled out. I think really right about now is when we're going to start to see the rental market tighten up. We have, we've talked ad nauseum about, the development pipeline and how there's really nothing meaningful in the pipeline. And that means that we're just not going to have a lot of product. We're going to have a supply constraint. And, at some point, we're going to start to see, pressure on rental prices. And a lot of the older bricker buildings will be the first to feel that. Because they're at a lower rental threshold. So I think, from that standpoint, there's a lot of positive momentum for these older buildings. I think they will see their income grow in the coming years. How far away is that? It's really hard to know exactly, but, we could be a year away from really starting to kind of feel that dynamic. But there's almost certainly nothing that can prevent that dynamic from unfolding at this point.
What are you telling your
Knock on
clients? Yeah, well, yeah. I mean, there's some things that could happen, but
right.
But I mean, I think we get continued immigration
Outside of those,
get immigration in. I think you'll see. I think we're already starting to see concessions and the Class A stuff, slowly burning off and going away.
Yeah,
that'll trickle down, to everything in that submarket as everybody kind of slowly got to move up in building class. So, what are you telling your clients? Maybe not even specific to the urban stuff, is to plan for 25. If they say, hey Lee, I own this building, what do you think I should do? Or what's your crystal ball say? What are the kind of conversations you're having?
I think it's really hard to time the market. If you're starting to think about what your plan is for your building, it's really hard to kind of time the market. And so, do I think we're going to see rent growth a year from now? Yes, definitely. But, what are interest rates going to do over that same period of time? What are your expenses going to do over that same period of time? That's been the biggest challenge, I think, for any of these buildings is keeping, management, expenses, operations in check. A lot of these buildings, we've seen the costs for maintenance and repairs go through the roof. Right. And, we're talking about 100-year-old buildings with aging systems that, need work, and they need lots of ongoing work. I mean, they've been there for 100 years and they'll probably be there for 100 more. But at some point they're going to need some of that work. And so the question of our rent's going to go up, and so therefore my value is going to go up.
If everything else goes in line.
Everything else goes in line, right? And so I think it's really hard to time the market. And it's more a question of what makes sense for you individually as the owner, in terms of owning that building. Do you want to own it for, the next year? Do you want to own it for the next 5 years? I think, in terms of Portland's market recovery in the core, I don't think it's, a year away. I think it's going to be a slow crawl back to more of a vibrant market. I'm a big believer in Portland, and I think it's coming, but I think it's going to be a slow crawl for sure. So I think anyone who's looking at potentially making a change or selling their building, it's worth having that conversation now. But it's kind of a conversation of diving in to see how is the building operated today. What is the upside on the rents? What is the condition of the units, and what kind of opportunities are there for each individual building? Every building is different, and so
and every owner is different, and every situation on that. And that's what I've have said to people. It's I can't give you a roadmap until we kind of know more of the pieces on how it fits in with your plan or your family's plan or your partner's plan. And like you said, every building's different, every ownership structure is different. Is it a long-term horizon, short-term horizon? What are you going to do?
Yeah. Yeah, I mean, I was looking at some data earlier, and it was kind of interesting to look at sales, values over the past 10 years. So from going back to like 2015 to now, I would say from 2015, the average price per unit for the older urban bricker building steadily creeped up from the low hundreds to, I think in 2021, we topped out an average of like 198,000 per unit.
Right.
And then from then, we've kind of been on a plateau. And in 2024 and 2025, we're down back into those 2015 levels, low 100s. And, as you and I know, we've been working on some projects that, we're having conversations with groups that are giving us feedback in the sub 100,000 per unit range. And so,
depending on
it's each building. They're all individual and unique.
Right.
And a lot has to do with their operations and underwriting, but it's interesting, because it kind of seems like we've kind of come full circle from 2015 to now, and what does that mean? If I own a building, how long do I need to hold on before we're back up to 2021? It's hard to say.
Well, and as I tell people, your price only matters when you're refinancing and selling.
Right.
I mean, the value of your building only really matters you're refinancing and selling. Between those periods, it's all about cash flow.
Right.
And then what's your cash flow doing? And I think what we've seen is the rents have kind of have stayed. They haven't gone down to 2015. They've shaved back a little bit, but it's been the expense side that's come up. And now
it's really the loss in gain has been on the expense side for sure.
So do we see a rebalance where we maybe don't have as much inflation on rents and we see some kind of rent growth? And if you couple that maybe with some kind of adjustment in interest rates, we never know. But
And do we see some relief on the insurance side at some point? There are a lot of wild cards out there that, it's hard to time the market exactly to see kind of where we're at. I do think, given just kind of where we've arrived in this market, you do have a very interesting kind of, opportunity on the buy side. I think for buyers who want to enter this market, it's very popular for people to, kind of look outside of Portland and say, get me out of Portland and get me out of Multnomah County. But, I think the value proposition for Portland right now is pretty compelling, where we have kind of a resetting of values, if you will, from a decade ago. And, I think there's a lot of positive, momentum in Portland. I think, there's change on the horizon from a political standpoint. I think we're getting our feet back on the ground in terms of kind of cleaning up the core. And, I think it's a really good time to be investing in that core for the long term.
No, I agree. I mean, they always say, when people are investing out is when you want to invest in and kind of going against. So I think that lends very well. And I think that's why that's why we've seen an increase of interest and capital. And I think there's a feeling the market is where it's at. We're not going to try to play this waiting game on interest rates, but really what's the fundamentals of the market in terms of operations and occupancy and rents and stability. And I think, as you said, there's some positive lights there of where we're coming. So, well, thanks for taking the time to speak with us. It's always good to see you, and we'll see you next time on Multifamily Market Watch.
My pleasure.
All righty.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is a member of Global Real Estate Advisors. Learn more at grea.com.